Bitcoin has seen one of the most violent corrections of 2023 so far. Where will Bitcoin go next? How has this impacted the macro trend? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. Bitcoin has seen a brutal correction over the last few hours with over $1 billion in liquidations and near to 12% correction on Bitcoin itself, resulting in a breakdown of the weekly uptrending diagonal support line, the 28.4k major level of horizontal support, and of course that incredibly significant Gaussain channel upper band. All three levels of defense, the last lines of defense for the bulls, have been lost, and we have officially entered a weekly bearish trend. In today's video, we're going to be discussing exactly what you need to expect next for the macro charts and a small time frame. We'll also be talking about this from a technical perspective, how this correction has potentially impacted the macro outlook for Bitcoin, as it has had quite a large impact. Before we get into it, guys, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural analysis, and of course, the relevant news events. No hype, no BS, no emotion. If you're interested in that kind of content, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and of course, the economy. If you're interested in joining our trading channel, this is our VIP group. We post exact entries, exact targets, exact stop losses for trades on altcoins and Bitcoin. You can see over here, exact entries, exact targets, exact stop losses. Just in the last 2 days, we've done well over 600% profit from our trades. You'll get access to this group, and of course, you'll get access to our group chats where we have a general chat, a help chat, our trading and chart chat, our news chat, our trade setup chat, and of course, our daily videos. Go ahead and contact me via the pinned comment in the free channel to get access. Now, I do also want to extend this to everyone. The market is very brutal. Sometimes you win, sometimes you lose. If you're following me and you've done very well, congratulations. If you're new to the channel, if you just didn't for some reason get into those shorts and you lost a lot of money, my DMs are always open. If you want to have a chat about that, go ahead and contact me, as I do know how difficult emotionally the market can be, particularly if you are new. So if you've lost a lot of money, you want to chat to someone and you don't know who to talk to, come talk to me. I'm very happy to have a chat. Let's go ahead and jump in. Now, before we do, onto the market data. As you can see, 24-hour volume is up 81%, sitting at 132 billion. 24-hour liquidation is up 527%, sitting at a total of 1 billion. August is now officially down 10.43%. How the tables have turned so rapidly. Looking at those liquidations, over 1 billion liquidations, the vast majority, over 80%, have come from long positions. Looking at the single larger liquidation was $55 million from one particular position. That person got wrecked. Moving on to this, we can see the volatility index is still at all-time lows. We've been preaching for weeks. Low volatility is compressing volatility. It's like a pressure cooker. The lower it gets, the longer it goes, the build-up of pressure increases, and eventually we see an explosive move, a large move, a directional move. We've been preaching this for weeks, and we have now seen that. That large directional move that we have seen was, in fact, the move we are looking at and discussing in today's video. Let's move over to DXY. The DXY has continued toward the upside, finding a little bit of resistance at these local high points of our prior highs. Again, this is going to be a small little zone of resistance, a potential rejection zone, but if the DXY is able to break above this level, we can then expect pretty smooth sailing toward the upside for the DXY into this range. Again, if the DXY does want to flip bearish again, we're going to need to see a rejection underneath this horizontal level of support at around 102 and a continuation down. If it does continue upwards, this will remain quite bearish for the market, stocks, and cryptocurrency. If we do reject and come down, this could potentially flip a little bit more bullish and provide some relief for the markets. The S&P 500 is continuing down towards our next target at 4,300, making some good headway from our short entries up around this level, down around 5% already. We are still looking for a continuation toward this level. But if you are in shorts in S&P, maybe a good time to start moving your stop losses into profit or taking some profits overall gain. If the DXY continues upwards, we are more likely to see S&P correct. Where could we go towards that uptrending support line, meaning a confluence at 4,300. Let's go ahead, guys, and jump into Bitcoin, because there is so So much to talk about. We're going to start off talking about the macro ranges. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So, before we get into anything else, we need to talk about what has happened, our potential targets, and what the chart means on the weekly and daily chart. We need to give you some perspective. So if we take a look on the right-hand side, I've gone ahead and annotated our key levels of support and resistance. Our key levels of resistance represented by the red boxes and support represented by the green boxes. We can see the distance between these levels, so these white areas between, are going to be indicated by our arrows or our range biases on the side. As you can see, we are currently within this weekly bearish range. The weekly bearish range is everywhere between 28.4 all the way down to 25.2, which is our next major level of support. We are currently in a weekly bearish trend. Over the last couple months, we saw a nice strong uptrend develop for Bitcoin. We've been telling you guys for many weeks, we saw signs of developing weakness. We saw momentum falling at resistance. We saw volatility and volume falling at resistance. These are all signs of macro weakness. That is why we ended up going short over here, and we sold our shorts down at this level, in fact taking profits on our shorts over here. But we can see we had developing weakness. We had the high time frame RSI. If we go to the high time frame here, show us that we broke under that 62-point level again, indicating a short signal for the RSI, indicating momentum was negative, and we saw that huge high time frame correction. This correction, of course, has resulted in the trend flipping from a weekly uptrend into a weekly downtrend. The big question in today's video is, will the weekly downtrend continue down and where will it go? Or can the bulls reclaim control? So we're looking at the trend right now. The point of which the bulls will need to break the price back over to reclaim control is going to be the same respective uptrending diagonal trend line. So currently, while we remain below this trend line, we are still very bearish. We are still now looking for a continuation into these higher, or should I say lower ranges on the downside. The next target, of course, the next support is going to be 25.2K. If 25.2 to 24.4K is lost, that is when we enter a monthly bearish trend. A monthly bearish trend is anything under 24.4K and has the potential to push the prices all the way down to 20,000. If we look to the top side, the daily bullish trend initiates above 30,000 and the macro bullish trend initiates above 32,000. So how did we predict this breakdown and how could you have seen it? As we've been saying over the last few weeks, the key trigger for price action is going to be price strength. So momentum, volatility, volume, all of these different metrics we can use to predict the probabilities of price movements. We didn't have a video yesterday for technical reasons, but for today, we can go ahead and take a look at what happened. We've said over the last few weeks, if you want to see a breakdown, we are watching for a momentum shift, a negative momentum shift to occur in the charts, meaning the RSI was going to have to break down from this respective trend line, okay, which we developed over the last few months. Again, the RSI is a derivative of price action, so the highs and lows are generally placed into the RSI at respective levels of which the highs and lows are placed in on the price action chart. When we break these levels, it indicates points of which the momentum has shifted from positive to negative, or from weak negative to strong negative, or from weak positive to strong positive. These shifts are direct reflections of the change in strength between buyers and sellers. If we see the RSI take an aggressive move down, we know that the strength between buyers and sellers has significantly changed. We have a significant more amount of sellers or selling pressure in comparison to buyers or buying pressure, and that can drive the price down. So the trigger for a breakdown was, of course, that negative flip on the RSI. If we do take a look at the RSI over here, we can see that flip of the RSI actually happened 1 day before we broke down. So it's a good indication for that. As we can see, guys, not only have we lost the uptrend, we have also lost the high time frame Gaussian channel upper band. And we'll discuss this in a little bit more detail in today's video. And finally, we have also lost that major 28.4K, which is the last line of support. We lost that level and we saw a significant correction toward the downside. So let's talk about the macro charts. Let's discuss what impact has this really had on Bitcoin and how low could Bitcoin go according to the current price structure. So if we take a look at the price structure, we can see very clearly now that we have developed what we call a head and shoulder pattern. Now you're probably thinking, well, how is this a head and shoulder pattern when this shoulder is higher than the head? The height of the shoulder is irrelevant. It is the ratio between the highs and the neckline between the high and low points of the shoulders and the head compared to one another. So the distance between the high of this head towards the neckline of this trend in comparison to the high of this shoulder compared to the neckline of the trend is larger, and therefore this is our head, this is our shoulder, and vice versa. We do have a valid head and shoulder pattern. If we take a look at the head and shoulder pattern and we do a measured move of this structure, applying a measured move range from the high point of the candle to the respective neckline, applying that ratio move toward to the breakdown point, we can see the measured move target of this breakdown is actually targeting 20,000. This means, what does this mean? This means the respective and probable range of price action according to the breakdown is going to be at a maximum of 20,000. Meaning if the trend cannot break above this uptrend again and reclaim strength, we do have a potential, whilst we remain in this downtrend respective to this uptrending trend line, to continue all the way down, provided two things don't occur. Number one, we do not create a new uptrend at some point during this move. And number two, we do not break above this old resistance. So this isn't saying 20,000 is an exact target. Okay, the target was actually 25.2K, which was reached, but 20,000 is a likely scenario or likely range of which the price could move into if the downtrend continues to build strength and continues over a period of time toward the downside. 20,000 will be that range. As you notice, if we do lose 24.4, we enter this monthly bearish trend. 24.4 to 25.5 is going to be that high time frame uptrending or high time frame horizontal support. We've held that support over 400 days. So a loss of that level is going to be a massive, massive trigger as we lose the weekly uptrend or the weekly high time frame horizontal support if that level is lost. So to reiterate one more time, we are currently in a weekly bearish trend. The price is moving down. The bulls are not in control anymore at all. The bulls are in fact absolutely decimated as the price has broken through this 10-month long uptrend. The price is continuing to head down and will likely continue to head down on the higher time frame, provided one, we do not establish a new high time frame uptrend, and number two, we do not break above this level of support. If we continue downwards, we can expect downtrends to continue below 24.4K, below 25.2K, as this is our next level of support. We shall expect the large correction of this move to be over. I will not expect today to see another huge correction. I will not expect another volatile move to come. It is more likely we find some consolidation, we move sideways a little bit, maybe we move back upwards. We'll talk in a second on the short term about that before we create that next move. Okay, the reason being is we have filled this VRPV gap, we have retested lower liquidity, and it's likely now we flush out some late shorts or even flush out some late longs that are trying to long too high before that next move is developed. Let's talk about on the high time frame what impact this has had on the macro chart. Starting first and foremost on the Gaussian channel. Every single time we see a break from the top side down of the Gaussian channel, this represents a shift in macro strength. It represents a shift from strength to weakness, particularly when we see breaks from the upper side into the channel. It represents a shift between a uptrend and moving into a downtrend. So we have a developing downtrend when we break in, okay? On the flip side, when we break into the channel from the bottom side in, it represents a shift from weakness to strength, but more importantly, it reflects a shift from a downtrend into a developing uptrend. So right now, what have we had? We have had a uptrend develop. We had high time frame weekly strength. We didn't push higher. We saw the break back into this channel. This reflects a shift into a downtrend. And that is, again, going to confirm the biases according to our horizontal charts. The technical indicator, the Gaussain channel on the weekly, suggests we're in a weekly downtrend, and this structural analysis suggests we are in a weekly downtrend, and therefore we can confirm from 2 points we are in fact in a weekly downtrend. Looking at the Gaussain channel, if we take a look at what's happened in the past we have seen breakthroughs which end up in a complete breakthrough. Again, a breakthrough, we end up pushing down through the channel. Again, we can go back in time, a breakthrough, we end up pushing down into the channel. Represents a price target of sub 20,000 if the price does actually break through the lower band of the Gaussain channel, as the lower band of the Gaussain channel is currently sitting just above $20,000. And that as well validates the potential measured move claim of 20,000. So we have 2 points to validate or to double check or to, I guess, like I said, validate these claims based on the structural analysis, and we'll use a technical analysis to therefore then confirm and validate those claims are actually, set in stone / they have substance to them. So moving back over to the monthly chart, guys, the big question is, how has this impacted the 4-year cycle? Is the 4-year cycle over? So this is the first time we have ever seen something like this occur. If we take a look at the monthly chart from a monthly perspective, the monthly uptrend has never started yet. We never saw a monthly uptrend begin because we never broke above that 32,000. What we had was a weekly uptrend. We had very close to a monthly uptrend. We were testing a monthly uptrend. We never quite had the monthly uptrend. If we look at the prior price action, we generally see two things. We see, according to the 4-year cycle and according to the monthly chart, we have our bear cycles, our reversal cycles, our bull cycles. During our bear cycles, we develop a strong base of support represented by this horizontal red line. This represents a 1 to 2 year long horizontal level. When broken above, we enter a new high time frame uptrend. We break above, we enter a new high time frame uptrend. We have not quite yet done that in this instance, and therefore we can't say with certainty on the macro chart, on the monthly chart, we are in a macro uptrend yet. All we have seen, and what we stand by this entire time, is we've seen a reversal from lows. We caught the low at 16.5K. We sold at 31K. We profited that perfectly, okay? But we cannot delude ourselves based on emotion. We have to be objective, and we can't say we're on a bull run. We can't say on a monthly uptrend yet. When does the bull run start? If we take a look at the prior price action, specifically do a trend-based analysis, the bull run is essentially, what a bull run is a period of time of increased volatility, momentum, and volume. When we have increased volatility, momentum, and volume, we see the trend going to a more aggressive parabolic phase. This is generally represented by a greater trend angle. If we take a look at the trend angle between our absolute lows and the point of which we enter a bull run, the bull run being when we break above that dotted trend line, we can see the trend angle swaps from 40% to 60% and 38% to 60%. And therefore, it is unwise to assume we are in a bull run until 48,000 is cleared according to the prior structures. If we look at 48,000, we can see the dotted trend line. Why is that valid? Because the dotted trend line represents the first high, the first dead cat bounce after the bull run. This is when the Gaussain channel comes into play. In every instance in the past, we have seen the Gaussain channel break upwards at the same time we have broken over that monthly resistance, which ends up resulting in a move toward that dotted trend line. Okay, we see that once. If we go to the prior cycle, we can see this happens again. We break above the Gaussain channel, we break above the horizontal line, we continue to retest the dotted trend line, and only then do we break back below it. If we look at this instance, we have seen something play out that we have never seen before, which is number one, we got the breakout of the Gaussain channel, we didn't get the break over the horizontal line, and now we have actually seen a break back into the Gaussain channel. This is a warning sign. This is potentially telling us that the monthly chart is actually developing in a way of which it has not done so in the past, and that could potentially impact the future result. A lot of people are saying, oh, this move is because of Elon Musk. We only corrected because of Elon Musk. That is a lie. News events often are put in place to justify market manipulation or to justify moves. This move was highly likely well before Elon Musk apparently sold. I don't believe he sold. I think it's a lie. I think the US government sold their Bitcoin. Elon Musk wrote their balance sheets off to zero in 2021. There's no way he sold $373 million of Bitcoin on SpaceX because they didn't have that to sell. But well, that's another story for another day. I don't want to talk about that on the channel. The news events often justify the price action, not the other way around. The only news events that actually impact price action are usually economic related, not these political decisions or these investors' plays. These are often well in advance and they are put in the public eye to cause manipulation and to justify manipulation that has already occurred. This correction was not manipulation. This correction was shown in the charts. We have seen developing weakness for weeks and weeks and weeks and months on end. It has been very, very clear we're going to see this correction. It has been in the charts. Let's talk about now, we've talked about the macro, talked about the impact on the high time frame. We've discussed how this has shaped and shifted the macro chart and has the potential to even impact a 4-year cycle. We've talked about the weekly biases, we've talked about the daily trend biases, we've talked about our levels. We need to finish up talking about the short-term price action. Could Bitcoin realistically see a bounce from here? What we'll be looking at for that to occur, and is it likely? So when we see breakdowns of necklines, we generally sometimes do see two things. Number one, we see retests of these necklines. And number two, we see no retests of the neckline. There's two options. We look at options, we see two options. Number one, we retest the neckline, or number two, we do not retest the neckline. So we have to look at it from a technical perspective and see how could the price develop in such a way that could facilitate a neckline retest, or is it developing in a way that would not facilitate that neckline retest? So let's go down to a smaller time frame and really suss out what is happening with the price action, talk about the next few hours of price action, potentially next day of price action, and then make up a decision of what is happening. So if we're looking at the price action over here, obviously we saw a very, very violent correction. If we're looking at the trend line, this 28.4K level over here, represented by this uptrending diagonal trend line, this black trend line, is going to be reflected as this uptrend. So you can't really see it on a small time frame, but that black trend line is that trend line. If you're expecting a retest, you're looking for a move back into this range before rejection. Now, before we go ahead and talk about what is happening, if we hypothetically do see this level would be an absolutely perfect area to throw in some new shorts if we do retest it, as it would be a retest of not only the 28.4 horizontal resistance, the weekly uptrending trend line, but also the Gaussain channel upper band. So if we do see a retest of that in the future, that would be an ideal area to look for shorts. If we look at the small time frame, we can see a VRPV gap. The VRPV gap is sitting very perfectly situated above $27,000. That extends all the way up to around 25.5 to this low. We do have a volatility gap in this range. And therefore, we can say if we break above 27,000, we can expect a quick and strong move up to 27.6. That is going to be confirmed in the charts. The question is, are we able to get into that range? We'll come back to that in a second. If we break above 27.5, we are likely to continue through this range. However, our next shorting opportunity on the smaller time frame would in fact be this area of price action between 27.56 and 27.75. We'll go ahead and block that in. So we have number one, a shorting opportunity at 28.4 to 28.2 if reached. We have a short-term shorting opportunity at 27.7 to 27.5 if reached. And we have a longing opportunity if this trigger point of 27,000 is broken and held above. Watch out for deviations. Let's take a look at the even smaller time frame and discuss what is happening. So on the even smaller time frame, we do have a little bit of volatility, a little bit of compression going on. We do have some local lows developing in this range over here. We can see we are underneath that level. We can go ahead and apply another local low over here. This is a very, very key level of support reflected by these local high points. Here, one more over here, and a retest here. If we do lose this level, we can expect a continuation back down. Be looking for targets around 23.6 or even potentially lower. It gets very scary for Bitcoin if we start dropping below 26,000, as that is when we enter this higher volatility range where we have a lot less historical orders, all the way down to about 25.2. So we're looking at a smaller time frame. If we lose 26,000, it's very likely we're going to 25.2. If we lose this horizontal support we're on right now, it's very likely we're going to go retest somewhere between 26,000 and 26,300. For a high time frame or the continuation upwards, we are still looking for bulls to reclaim control of 27,000 on a smaller time frame for a push upwards. But if we look at the higher time frame, the bulls do not have control until the price is able to break back above its uptrend if it is about to happen. So right now, to give you a whole summary, guys, the charts are looking very weak. The bulls are losing / have lost control. The small time frame is in a rapid downtrend. The weekly trend is bearish. The monthly trend is not looking very good. The 4-year cycle is not a threat, but the monthly trend, according to what we've seen in the past, is definitely at threat. We are seeing things develop that we have not seen develop before. Of course, a lot of news and a lot of FUD is driving this aggressive price action, but aggressive price action nevertheless should be taken at face value. Just because a news event causes the price to go somewhere, you can't assume that it wouldn't have gone there if the news event didn't happen. What I like to say is news speeds up the inevitable. It doesn't change the fact. So if we are going to see a correction, the news would just speed it up. It'd make it happen faster than if we weren't seeing that news event. It eventually develop anyway. Thanks for watching, guys. I hope you have a great day. Obviously, if you do want to reach out to me, you can go ahead and do so. In tomorrow's video, well, we actually won't be tomorrow, but on Sunday, we're discussing a little bit more as the price develops and what happens. So, quick summary, everything's looking really, really bad. You should be really looking for shorting opportunities. If we do see these bounces, every bounce is for shorts, okay? Every bounce you should be looking for is for shorts. Every bounce is expected to be a bearish bounce, or should I say a bull trap, okay? Provided the trend does not turn back bullish. If we're looking at these high time frame zones again, one more time, okay? If we look at these high time frame zones and kind of delete all these drawings of the chart, you can see very clearly when we flip the chart, I don't know what is happening over here. When we flip the chart, we can see we are in official uptrend, right? If you saw this chart over here, sorry for the mess. If you saw the chart over here and you saw a breakout, you would assume this is a strong breakout. You assume the trend will continue upwards until we reach these next levels of demand, next levels of support. Thanks for watching. Catch you guys on the next one. Cheers.